Okay, so for today's trade, if you were here in pre-market or if you were even in live trading, the voice chat, which if you were not, I highly recommend you guys are tuning into those. Those are really where all the magic happens. Calls like these, yes, this is where the magic happens, but the magic really happens in the live trading calls. So that's where you guys got to tune in. But anyways, for today's trade, we only took one trade on Tesla. We finished very shortly after market opened, so we were done like 20 minutes after market opened. Super nice. But anyways, in terms of the entry that we had taken, it was off of this supply area. Supply area meaning in a price range where sellers have previously stepped in heavier than usual, also being the price premium on the charts, the most expensive point possible. So when price is at the most expensive, highest point possible, those sellers are going to want to be taking profits, right? And if we have a ton of sellers, sell orders being inputted in one specific price area, which happens to be supply, that price area will then lead to a strong move to the downside, just like we had gotten here. So you can see that this supply was actually created right here when we had strong highs being created. And then what do we have? We have a move to the downside, right? Strong move to the downside, indicating strong amounts of selling being inputted within this price area. We always want to look at the area from where the strong selling or where the strong buying started. So in this case scenario, this is where the strong selling started. We marked out this area, extended the zone out to right here, boom, and then you can see, keep in mind the shaded area is when market is closed. Let me move this a little bit. The non-shaded area is when market is open. Okay. Let me get rid of this as well so you guys can better see. You can see literally the first candle when market opened, we tapped into this supply area. So initially I was already looking to, or I was already looking for a rejection, already looking to take, puts, right? So we started to get that strong rejection candle, that strong wick, which is starting to indicate signs of selling stepping in. Keep in mind that we had strong buying leading up until this supply, but once we touched that supply, where did all that strong buying go? Right? Where did it all go? It started to slow down because since there were so many sellers within this supply area, those sellers started to kind of overlay on those buy orders, on those buyers, right? And those buyers kind of started to dissolve, and then the sellers started to overlay, and that's what pushed price to the downside, especially pushed it so significantly because it was market open, so always at market open we're going to be getting that strong volatility, and also we opened inside of a supply area, an area that is likely to provide us with strong selling pressure, lots of selling orders. That's exactly what we did. I had taken my entry. My stop loss was a break above this supply zone, right? Why was it a break above this supply zone? Because if price broke above that supply zone, that would tell us that, okay, the sellers that we had expected to step in within this price area are not there anymore. They're not active anymore. And those buyers are initially stronger, right? So that's why I had my stop loss at a break above. It would be the same thing for demand. It would be a break below. You guys know my stop loss is always in the same spot. It's either a break above supply or a break below demand. Now, you can see here, we continue to push to the downside. We really only had one rejection candle here, and that was because we had a bullish order block created here. This bullish order block was created within pre-market. If you're not familiar with bullish order block, pretty much just another support area or another buying area, right? You can see once price tapped in, we got a little bit of a rejection, a little bit of a reversal here, but honestly, I wasn't too worried because A, sellers were looking pretty good, and B, we had a bearish for value gap right here, right? So look what happened. We came down, created the bearish fair value gap, tapped the bullish order block, reversed a little bit, and then this bearish fair value gap here, which is the red zone, came up, rejected it, pushed back down, right? I initially completely exited right here at this other buying area, we can call it. And then you can see price just literally continue to rip to the downside pretty much for the next hour or so. So beautiful trade, beautiful move that I had caught. Like I said, if I were to hold it a lot longer, obviously it would have been different, but I still caught a green trade. So I'm not going to have FOMO, or I'm not going to, be, oh man, I wish I held longer. No, that's a terrible mindset to have. We executed it well, executed it perfectly. And then if I did not mention, once we did tap this bullish order block, that's where I had taken my first profit trim, right? Because I'm not going to obviously be holding full position sizing the first trade. Obviously, as we continue to move, as the position continues to move in profits, I'm going to be securing those profits, right? So we're not letting a green trade go red. Keep that in mind. That's very big. And then you can see, obviously, if price did reverse at that area, which we did, but it was very little. But let's say we did reverse and we came all the way back up to break even and stop me out. Since I took the first profit trim here, it would have kind of been a little bit of a bit of a safety net for me if price came back to break even. Because since I took the profits down here, if the position reversed on me, then I was still safe with the profits that I had taken once we had tapped that area, if you guys are understanding what I'm saying. So pretty much I'm really just saying this because that's why it's also super important to always secure your profits. Never get greedy. And one of the best tips that I always tell you guys is always look to take profits at key levels, or always look to have your take profit levels at key levels. Like, key levels are simply just high probability reversal areas on the charts. So it could be a support, it could be a resistance, it could be a fair value gap, it could be a demand, it could be a supply. Use areas like that are likely to provide price with the reversal, because when you do, you're able to take profits at the highest point possible. You're able to exit at the highest point possible in case price does have that reversal. Or you're able to enter at the lowest point possible before price does have that reversal in your favor. So hopefully you guys are able to understand what I'm saying, but that's going to pretty much be it in terms of the trade that I had taken today. I really wanted to go in depth and explain why I took the trade and where I took profits and etc., etc. So you guys are just really able to understand what I'm looking at and why I'm looking at it. So you guys can then take pieces of that and then apply it to your own trading. But that